In the bid to build the next generation of payment structure, what are the formulas to maximize financial inclusivity? Joining us in this next conversation are Dr. Patrick Njoroge, Governor of the Central Bank of Kenya, and Her Excellency Siri Chia, Assistant Governor of the National Bank of Cambodia. Moderating the conversation is Dante Disparte, Chief Strategy Officer and Head of Global Policy at Circle. Let's head over to hear about the race to build the next generation payments infrastructure.
Well, thank you very much. It is 4:40 in the morning here in Washington, D.C. It is 5:40 in Singapore, 4:40 in Phnom Penh, Cambodia, and 12:40 p.m. in Kenya. And so much of the world's needs today are powered by the internet, an always-on global phenomenon that has allowed for global connectivity, frictionless exchange of information, and content and knowledge all over the world, armed with little more than a phone. And so what better way to ask a question of, what better guest, I should say, to be able to dive into the questions plaguing not only competitors in the financial system and in the payments domain, but also amongst central banks themselves, than Her Excellency Siri Chia and Dr. Patrick Njoroge, both leaders in the central bank domain, and I know very, very careful observers of what has been transpiring in the next generation of payments infrastructure. So I'd like to begin perhaps by just asking a question to contextualize the first choice I think many have to embark on from the public sector is, what is the right payment infrastructure approach? Public, private, or hybrid? Maybe I could start with you, Her Excellency.
Thank you, Dante. I didn't realize it's that early on your end.
For Singapore, I'm always on.
Well, to your question, I think there's no right answer. It's really depend on the level of the financial sector development of that particular country. I think if you already have a private sector that is already efficient, then you may just let it be. On the other hand, if you have a private sector that fragmented, like the case of Cambodia, then you may need the public to come in. And I think at the end of the day, to me personally, the best solution is collaboration. So a hybrid solution of the two, where you've got the efficiency of the private sector, but you have the inclusiveness mindset of the public sector. Well, just the efficiency of the private sector and the inclusiveness mindset of the public sector.
That makes sense. And so if money is a public good, perhaps the rail network on which money travels, which ultimately is the question about this next generation payment infrastructure, could potentially be public, private, or a hybrid model. And so, Dr. Njoroge, in the Kenyan context, and in your view, not only of what is transpiring in Kenya in the payments world, but from the lens of a central bank governor, how do you see that public or private choice?
Thank you, Dante, and I'm glad to be here. Thanks for the invitation, and great to share the stage with our High Excellency Chair Siri. On the question, actually, I would just support what High Excellency just mentioned a moment ago, which is actually there is a choice. There's a choice, and in many of these things, there's always a choice which way to go. For those countries that have a very advanced private sector, or have a lot of, let's say, activity in this space, obviously the point there is supporting the private sector, and the public sector will be there to regulate, etc. But occasionally, you do have those instances where you may want to categorize, let's say, to push the development. And in that case, the public sector could step in. But it is important to not to stymie innovation and actually lead, and then let the private sector develop and create the ecosystem. So there isn't any one size fits all approach, but I think the regulators and indeed the public sector should be very conscious of the long term where we're going. Thank you.
Thank you. So obviously, as I'm sure we're seeing on display at Singapore FinTech Week, the evolution, the speed, and the rate of competition on different types of payment infrastructure standards including proprietary technologies as well as open source technologies, is advancing very fast. How does a central bank, and from the lens of monetary policy in a domestic setting, how do you ensure that you don't import technology risk or obsolescence risk in some of these choices? Is it free market competition? And or are there ways of ensuring a much more evergreen, long-range approach to payments infrastructure? And this is, I suppose, an open question. If you feel an urge to respond, happy to have either of you comment on it.
Well, maybe I start. And I think, again, this is, there is no one size fit all answer where proprietary technology or an open source technology is better. Right? It depends on the situations where we're in. There are different concerns for different countries. There can be concern about cybersecurity when you use an open source technology where the people can know the architecture, the foundation of your technology. There's also concern about national security as well, and that's we have to build in. In terms of the speed of development, definitely we've seen the pandemic has accelerated the adoption of this technology, and certainly for Cambodia during the pandemic, we've seen an increase just between Q2 last year to Q2 this year. We've seen electronic transaction increase by 350% in volume and about 200% in value. And that is really significant for countries like ours. So going forward, it's also on the shoulder of the regulator to make sure that there is safety and efficiency in those transactions, and that there is the right competition in the markets.
And no doubt, the pandemic has been a major multiplier of technology adoption. I mean, one of the questions I'd like to ask both of you, and perhaps Mr. Honorable Dr. Joroge, we could ask you, is it's accelerated the review of central bank digital currencies as one of the potential policy options central banks have around the world. Something like 90% of the world's central banks are in some degree of exploration of this policy option. And is this on the agenda in Kenya as well?
Absolutely. I think, but before answering this question, I want to pick up something from the last question. I think the most important thing is that we as private sector, as a public sector regulators, our objective remains the fundamental outcomes. That is things like financial inclusion, things like financial stability. So whatever happens in the ecosystem, we are always focused on those concerns. So from that perspective, we are agnostic to the technology that is there. So going back to your question, I think the CBDCs, this is a new sort of area that has come into the picture in the recent maybe 3 years or so. And it provides some potential. It provides some, let's say, possibilities. And we, like all other central banks, are looking at how this can help us address the more fundamental issues, like, as I say, financial inclusion, etc. But I think the key issue for these CBDCs is, will it improve financial inclusion, and will it help us reduce the cost of transactions? So anything that actually helps us or raises the expectation of speed of the transactions, completeness, reliability, and indeed lowers the cost, obviously something that should be supported, encouraged, etc. The question we have is, will the CBDCs really, aside from the hype, will it actually deliver on those? But we cannot dismiss it out of hand, and that means we have to explore it with other central banks. One of the key areas for us in the Central Bank of Kenya, we are looking at this more, not so much from the perspective of domestic benefits, because there we have a very elaborate, let's say, e-money system. Actually, from our perspective, we see that benefits would be more cross-border. If it can help us resolve that that would really be helpful. But that means working with other central banks as well. So that is really how we are dealing with it. But again, the issue is not to be fast. The issue is to do it right.
Oh, that makes sense. And from the perspective of the National Bank of Cambodia, this question of CBDC, domestic policy, and payments innovations versus, managing in a cross-border environment, the best approaches of moving value.
I fully agree with what Governor Patrick mentioned about the use case of CBDC. I think it makes sense for developing country to use at least the retail CBDC to increase financial inclusion and promote, interoperability in the local payment system. Again, back to what I said earlier, when you have an efficient system, a private system in place, you don't want to go in and disturb, the system and risk to have unintended consequences, unknown consequences. But again, I think there is still a good use case for a developed country, for instance, and eventually for a developing country as well, for cross-border use of CBDC. I think this is something that we all try to achieve. But again, as Governor Patrick mentioned, it needs collaboration going forward.
No, that's thank you very much for your perspective on that. It's the question I always get asked in these panels is stablecoins versus CBDCs, and in this instance, it's CBDCs versus stablecoins. But you see central bank digital currencies principally as something that can reduce cross-border friction. And I think in that spirit, the question I have is, the second you execute a cross-border payment, the technology standard, which is ultimately the question we're debating on this panel, the payments infrastructure may be outside of your decision or your influence as a central bank. And that may potentially introduce unfair competition. One of the big concerns of many global payments projects or blockchain-based payments projects is that they're peer-to-peer in their very nature. How does a central bank and how does a country, on the one hand, promote financial inclusion, which may be possible through these international standards or emerging international technologies, while at the same time protecting domestic monetary policy and sort of domestic consumers as well? And maybe we can start with the Kenyan view, and then we can turn over to Cambodia as well.
Thank you very much, Dante. I think the one word that we need to stress is collaboration. We cannot do it alone. And so it means you need to be working closely with other like-minded institutions, central banks from our perspective. I think there's no going around that one. And in those conversations, and central banks are very much, they're very close in wherever, around the world. They are probably one of the close sort of, clubs that they are. And the conversations, they are kept confidential, etc. So everybody is safe, feels that their conversation would be kept safe. So from that perspective, it is important to work with others and then begin to establish what works and what standards are you going to adhere to. And I think in this, we have to understand that the central banks could be at different points. I'm talking of even in terms of technologies that are in place. And so in that sense, there's a lot more conversations that need to be held. So I don't see this as a quick fix. And that's why this is taking some time. And we're having conversations. And it's true, there are a lot of experiments that are being done now, piloting in the sort of cross-border space. But I don't think there's any other way of going around it except just collaborating with others in a safe environment where you know that your concerns are going to be taken seriously, regardless of your size, regardless of other factors that may appear important in the current arrangements of global, let's say, affairs. So that's really the point I would want to stress.
Thank you.
I may not directly answer your question, Dante, but since you mentioned about CBDC and stablecoin, I just want to say that, the adoptions of CBDC as per its definition where, the central bank is liable to whoever hold it, there is a lot of uncertainty in terms of its implication now, the way we would conduct our monetary policy, right? Because we conduct monetary policy through the financial system, and here we're taking away part of the role of the financial system and do it ourselves. And what know your decision mechanism is going to be like. That's something. And I'm going to say something that is probably quite controversial in the sense that, there's a lot of trust deficit in the public institution nowadays. We've got the financial crisis started with it, where, there's the distrust in the financial institution, in central banks. And then recently with the pandemic, another distrust in the government with the vaccination program, and then the COP26, where there's a lot of unhappiness about the way government handle climate change, etc. And that is where you see the stable coin coming in, and it's going to make sense going forward, at least I would see for retail remittances. That would be something I think it's going to be very interesting to observe. Having said that, I think for the CBDC use case, cross-border CBDC use case, it could be very interesting for cross-border trade settlement.
No, thank you. And of course, trust is what underpins not only money, whether it's issued by public authorities or privately issued, it's what underpins so much of the way the global financial system works, and it has been on decline institutionally for the last decade at least. And I guess to build on the trust question, not that this question applies to either Cambodia or Kenya, but isn't there potentially an element, as many more central banks are weighing direct competition and picking technology winners and losers as they contemplate real-time payment systems infrastructure, and then which types of companies, banks, payment systems providers, techs, big tech, little tech, et cetera, can enter the movement of money? Are there some potential unintended consequences in picking winners and losers? And then what advice would you give the central banks who are listening around the world around getting the balance right between long-range policy goals and promoting vigorous competition and innovation in payments infrastructure?
All right. If you don't mind, I could go first.
Please.
Thank you. Briefly, I think it is important to appreciate that there will always be losers in each one of the technologies, each one of the schemes that you put out there. There'll always be some losers somewhere. In a sense, the law of unintended consequences remains with us. And I think this is where we need to identify where those unintended consequences are, and then put in remedial measures to deal with them. For instance, you can think of maybe unintended consequences in terms of people that will be excluded from the financial sector if certain technologies are put in place. Think, for instance, if the technologies, for instance, we are talking about even smart contracts, etc. You need a smartphone to run with that, and not a feature phone. Now, that already excludes a significant proportion of people in the low-income countries. And in some sense, you need to have remedial measures around that. So it is important for us to maintain our perspective. Secondly, and in terms of what are the measures to put in to remediate those consequences. Secondly, it is important for the public sector to stay away from, quote unquote, choosing the technology, because that technology will actually be, it will run its course and eventually to be overtaken by other technologies. So in a sense, this is why it is important to be more agnostic about the technology and be more principle-based. What we've done in Kenya, we've spent a lot more time coming up with principles. And Her Excellency just mentioned some of the principles, such as interoperability, such as cost, such as security, etc. So there are specific principles with which you can use to measure or value or judge the technologies that are coming. Unfortunately, I have to be, in this again, to be a bit provocative, the conversation is less about the value add. The conversations today are more about the technologies. And I think that's where we are going wrong. At the end of the day, nobody cares about some of the technologies that we use every day. And think about the technology inside your iPhone. Maybe years ago we were very excited about it, but now it doesn't. Or even in your laptop, I don't even know what processor is running my laptop, and it doesn't matter in the end. It's doing the job. The value is in the outcome. So I think that's the way to deal with it, and it isn't just in this space. It is really across the board in terms of technology. Technology is our handmaid. It is not our master.
So well said.
I fully agree 100% with what Governor Patrick mentioned. I mean, at the end of the day, is what we want to achieve. It's not about the technology. And I think we, central bank, we're not the best experts in technology, right? And I used to actually joke, and it's true, is that the fact that Cambodia created an interoperable payment system using blockchain technology, everyone got to know about it. If I were to use a different technology, nobody actually would care, right? But the end goal is actually interoperability among the different players. And I think I agree with Governor Patrick saying that, we focus too much on the technology and not enough on the end goal and not enough on what we want to achieve.
Completely agree. I've long said that when we stop talking about the hardware and the software of this emerging internet of value and we start focusing on outcomes, then we know we have changed the world with it. So speaking of technology, I have a handy clock advising me that we're down to the 2-minute mark. And with those 2 minutes, maybe I could ask for any parting thoughts, beginning with you, Your Excellency, and then followed by Patrick on the subject of infrastructure, getting it right, and how ultimately events like Singapore FinTech Week enable the cross-sector collaboration and international connectivity that a lot of this necessitates.
I think my parting word would be there is no one size fit all. You have to understand what your system need, what your country need, and what you want to achieve, and not too much focus on the technology, but more on the end goal or the outcome of what you want to achieve.
Thank you. And for me, I think a couple of things. First, the objective or anything that really raises the expectation in terms of speed of payments, in terms of lowering costs, ease of transaction, or even interoperability, those sort of fundamental things, I think that is a good thing. At the same time, we need to focus, as we underscored just now, about the real fundamental objectives, which is financial inclusion and indeed ensuring that we don't destabilize the system. So those are fundamental. And the technology will help us. And the technology today will probably not be the technology we are going to be having tomorrow. So in that sense, we need to focus on these things. And there is a lot of potential for sure. The technologies that we have today have raised the expectation dramatically. And it is our business to work to make sure that actually we deliver this, these outcomes that are prospective to our vast population.
Thank you. Thank you. Well, I'm grateful to the two of you and grateful to Singapore FinTech Week for the occasion of sharing a virtual stage. Perhaps the next time around, we will be doing this in person somewhere in the world. Thank you so much.
Thank you.
Thank you.
Hello, welcome everyone. We are all aware that the millennial generation has to witness and go through quite a lot. We have had 9/11 nearly 20 years ago, the global financial crisis, the COVID-19 pandemic, which is still happening today, climate change, just to name a few. And social media booms have made it easier for everyone to connect, but yet create so many new pressures just so to keep up. Some people have commented that due to the pandemic, they've been held back for 2 years from pursuing their goals and dreams. Now, we're all living in this situation, and for leaders, it makes it particularly challenging. And I have here with me Jürgen Klopp, many of you will be familiar, from Liverpool, and Bill Winters, CEO from Stanchart. Thanks for joining us. And I mean, we all know that leadership is important, good leadership is important. Perhaps I could ask you, and maybe Jürgen first, and then Bill, and then myself to chip in one sentence, how would you define good leadership? Jürgen.
Sorry, I cannot do that in one sentence, but I can do it pretty quick. Good leadership is for me, you have to be a good listener, because only if you listen or watch, you know what kind of group you have to lead, and that's the first step. If you don't do that, if you don't only lead without knowing who you are leading, you will fail. Maybe not in the short term, but in the long term.
Thank you. How about Bill? How would you define good leadership in one or slightly more sentences?
Well, if I had to put it into a sentence, I would, in fact, I'll put it into two words, which is curiosity and empathy. And I must say, I've spoken with Jürgen about this before, and I had a sense of those two words, and I think that's something I aspire to. But when I hear Jürgen talk about leadership, I feel those two words coming through. Maybe not maybe that's not the way he would express it, but I feel those coming through, and I frankly feel very reinforced by that. But yeah, curiosity and empathy, I think, are the two characteristics of a key leader.
That's pretty much what I said in better words. Much smarter.
Well, I find it difficult to squeeze it into one sentence, but I would say that for a good leader, I mean, obviously you have people who follow you, and the question is, why would people follow you? And I guess it's the ability to engender trust, and how do you then enable that trust to be earned and gained? I think mainly two things. One, values, who you are as a person, as some of you have shared, to listen, to be curious. But another part of it is to provide a sense of direction and purpose, sense-making amidst a very complex world. So good leadership, I think, ultimately really is the ability to gain trust through your values, and also the ability to provide clarity and purpose. But I think we're all pretty much in the same ballpark. And clearly the pandemic, I think, has brought forth a lot of different challenges from leadership. I guess we also need to deal with issues like, for example, mental health, right? So for Jürgen, obviously mental health is a topic that's, in society and certainly in the world of sports as well. And physical fitness, it has an impact as well because of not only just a pandemic, but the restrictions in place. How do you both, I guess, personally, and how does your team deal with expectations and pressures amidst this environment?
Wow. So first and foremost, I'm really happy to say that it's that we are in a much better part of the pandemic now. I know it's still existing, but I speak now only from our area here, from where I'm in the moment at the training ground. Life is much more normal than it used to be. So we can do what we love. That's the big plus in our business, that we came all into it because we love what we do. That might not be in all businesses exactly like that. Very often in life, people have to do the work they have to do to earn the money, to earn a living. And so we do what we do with a lot of passion, naturally. Means in the moment when we arrive here and things feel normal, we are in a good place. We're in a good place. On top of that, apart from a lot of testing and all these kind of things, we have now supporters back in the stadium. Hopefully it will stay like this. And then we have the feedback as well again. Before that, without supporters, it was like, performing in an empty room. It's completely different. So, but did we have issues over the time? Yes, we had, but we could solve that just by talks, just by showing perspectives. But mainly is, I think, responsible for mental health is then the private social environment, like the family and the close friends. We do what we can do, but we are not together for 24 hours. So we try to encourage the boys to tell us what kind of issues they face, and then we sort them. We don't do that pre-active too much, to be honest. We offer just a really natural, warm environment where we feel very comfortable. That's the idea behind it.
Thanks, Jürgen. But for Bill, I mean, from Stanchard's perspective, you have a massive global footprint. And in Singapore alone, for example, 10,000 staff in Singapore. So how do you then deal with all these different issues? How do you build, sustain, and I guess the most difficult of all, change culture, especially amidst the prevailing conditions?
Yeah, Trenton, I think the way you characterize the issue is absolutely correct. It's been a really, really challenging year for 2 years for all of us, for me, our colleagues, clients, but it's very different from location to location. Obviously, some people were dealing with overwhelming health issues. Others were dealing with the nature of the various lockdowns that we experienced. To come up with a single recipe for all that, and obviously people are coming from different cultures with different professional and personal challenges as well. so we tried to go back to really your first question around leadership. What is a leader? And it's not, I'm not talking about just from a few of us at the top of an organizational diagram, but really leadership throughout the organization. And it does come down to, I think, again, that this number one is empathy, just understanding, making the effort to understand and show that you understand the challenges that people are going through, and evidencing that continuously, and then responding as best you can. So we've introduced some I think pretty progressive hybrid working arrangements. I think everybody's going the same direction. We'll all experiment. We'll find that things work and things fail, or things are less than optimal, and then we'll adjust. But just one example of the ways that we've tried to respond in this environment. But I mean, looking at it more broadly, I think organizations can move through some difficult times if they really feel like they're operating with a common purpose. And we identified our purpose probably de facto 150 years ago as driving commerce and prosperity. And we tried to do that through our what we call our unique diversity, which really reflects the nature of that global footprint that you mentioned up front. And that what we found through this pandemic is that having a common purpose it helps people to stay connected to the organization, which also gives them an extension of their own personal purpose. And what it's manifests itself in a lot of ways. We were very quick off the bat to put financing facilities in place for people that were helping to fight the pandemic. Employees raised a $50 million fund that went to the hardest hit areas, which we've now largely dispersed. But obviously, it carries on. And it carries on today in different ways into the approach that we take to sustainability, for example, which I think our colleagues are really proud that we're a thought leader in that space and an action leader. And that sense of purpose, I think, helps pull people through.
I think sense of purpose is really important. I mean, one of the questions that we have to address is, as you start out, what are the advice you provide them? For example, for first-time founders, next-generation entrepreneurs, my own sense is exactly that. Having a clear sense of purpose. I mean, we're very good at jumping to details, doing this, doing that, but sometimes taking that step back to have that clarity of purpose is really important. And I guess for entrepreneurs, really, is just take that leap and really to start trying. So for Jürgen, from your perspective, if you imagine yourself, right, giving advice to your younger self, just as you were starting in a football career or a career as a manager, what advice would you provide him?
I got that question asked a couple of times, and it said, don't worry would be the advice I give the young version of myself, because who could have known that my life would turn in such a exciting one. That was not clear when I started in the business. So that's it. But I think you asked for something else. It's just, and what I did would be, so leaded me to the point where I am now. And that's obviously not a bad one in the football business. I know that. Be, again, curious, be ambitious, be busy, be full of desire of what you are doing, and then you can make it. Unfortunately, in life, there are no guarantees. The only thing, so it means to give you absolutely all doesn't give you any kind of guarantee to get anything, but it's the only way I know anyway. So that's how it is, and that's what you have to try, and that's what I did. I remember very often when my early stages as a manager, I was so incredibly busy. Today I can't believe how I did it. So I watched more football games than a day had hours. So that's how it felt from time to time. And in my business, that's obviously really important. Imagine I would have invested that time in something really good. So like in medicine or something. But in my case, it was football. So yeah, keep yourself on your toes, get all the information you can get, make all the experiences you can make, the good ones and the bad ones, deal with them, take them, get up again, and all these kind of things. So then life can be really a good one. In my situation, I know you can fail without your own doing. I know that, but again, the only chance to achieve something is to give you absolute everything.
Indeed, I think the future is exciting. I think the key thing is just to embark and really try our best and do it as much as we can. And for the new generation, I think many of them would expect business to move beyond just a profit agenda. Companies must also have purpose, play a role to serve the well-being of society, harness technology, and fulfill sustainability responsibilities. So for Bill, how would you leverage technology to overcome potential trade-offs between purpose and profit?
I mean, technology has been an enormous enabler, probably throughout human history, as a practical matter. But it feels like it's as impactful now as ever. So I've like many of us, participated actively in the whole COP26 process, and there's a lot of focus on some of the old world steps that we can take to improve the prospect of this catastrophic temperature change. Meaning planting trees and protecting the trees that are there, other changes, basic changes to lifestyle, all of which are highly relevant. But there is an incremental way out of this as well, which is to develop the technologies that are fundamentally different in terms of both how we could reduce our emissions today, but also how we could actually get some of these emissions back out of the atmosphere and safely stored underground. And when I think about the consequences of getting this one wrong, which I think are almost unimaginable in a lot of ways, leveraging technology in a very determined way could be a very important increment in this fight against this terrible challenge. But it really only works if we give the proper incentives for the investments in that technology. And I'm always a little bit shocked by how much of the thoughtfulness goes into things like the latest video sharing app or something that helps you find a date on Friday night. Both important, but not going into the things that could have such a profound impact in our society. So I think the public-private sector need to work together to get that technology investment to the right place, because we know it can be transformational.
So we have a sense from technology and how, in the business world, how it operates. From my perspective, in the public space, I would say technology plays a critical role in and a role in uplifting society, especially those who are marginalized or disadvantaged. Because with technology such as access to smart devices, even children from more disadvantaged background can have access to information that's out there. I think equipping them with the physical devices, but also equipping them with the understanding and how to use it. I think that's a great leveler in many ways, and I think we need to work that through the education system, I think through the various ways to sort of reduce inequality. But so from a football perspective, Jürgen, how do you see technology playing a role in football? Apart from VAR, right, which we all have views about, but so how do you think technology plays a significant role in football?
Because you as a good example, as technology is not always a step forward. At least when it's still handled by human beings, then it's I don't know exactly what that would be, then human technology or something like that. Yeah, of course we use it, and over the years it's got more and more, but it's still, and I like that. I said it only a couple of days ago. It feels like it was yesterday when I was the youngest coach in Germany, and now when we play here star football, I'm the oldest man on the pitch. That's really horrible that things like this go that quick. Inside, nothing changed. Outside, everything changed pretty much, and that's the situation. When I started, the main thing we have to do to learn about football is watching games back, and not only the own games. And of course, that was a different technology with DVD, or still, I'm not sure how do you call it, video cassette, like really rewinding forward, all this kind of stuff. That was horrible, took really long. We are much further than that. We use it, of course, in sports science a lot, much more. Thank God for all the players of this generation, because my generation, we got killed in training for no sense, with no sense. It was absolutely, didn't make us better, didn't make us more resistant, but it was state of the art at that time. I remember we had to take salt tablets when in the summer before training, and we're not allowed to drink during training. Imagine that was state of the art in sports science that day. And today we drink after every 3 minutes pretty much in training. That's probably a bit too much, but it's that's the difference. So we use science a lot, and with that then technology comes in. The boys have obviously their GPS stuff around that. We know how much to run stuff like this. In the good old times, we had to judge that with our eyes. I still do that, but get on top of that more information. So we know everything about everybody. And in the end, it's still the same game, and that's I like in football. But I know the world changes around us, and I think there's one point where we should really put the finger in, but because that's something else which changed in the last 30 years a lot. That's the climate. And if we think about that, then for our generation, it's obviously still okay. We have now a bit hotter summers and stuff like this. But we should not forget, we are not the last generation, and there are others coming up, and it's not only the next one, there are others after that. So I think that's a massive, massive thing. Whatever knowledge we get over the next few years, we should put in that area, because, yeah, I think it should not stop with us or with the next generation. There's a lot to come and a lot to develop and involve in all these kind of things, and hopefully we have the place for that here on this wonderful planet.
Thanks, Jürgen. Actually, I think as a sort of closing question, I thought of asking this to Jürgen as well. I was recently at the Tokyo Olympics, and there is some controversy. Some folks felt that whether the Olympics should continue because of the COVID-19 situation. But I remember when I was speaking to my counterparts over there, and I told them that this was Japan's gift to the world, to host the games where, sports has this electrifying effect on people, where you rally people, you inspire through victories, through defeats, and you see people rallying around together. And then sports has that effect. So from Jürgen's perspective, I mean, you are very much involved in football, but what's your perspective in terms of how football, sports really contributes to our overall well-being amidst this sort of COVID-19 situation? Every day we're looking at numbers, infections, but sports, I think, has an uplifting effect. Any thoughts on that as a closing question?
Yeah, I think it's incredibly important. I think if life would be only work, then we all would, nobody could really enjoy it. So then you do what you have to do. But you need this kind of moments where you can just let your thoughts fly and be part of something different, maybe sometimes something bigger. I think that especially the Liverpool family is all over the world. I'm not sure about exactly how many supporters we have. The numbers around about 300 million. I'm not sure if that's right or not, but I could imagine. So because there's no country anymore where I could go without people recognizing me. That was much easier when I was a Dortmund coach, by the way. And this is already a big club. And so it's something we can really enjoy together, and that's it, together. You don't feel alone when you are part of a football team like Liverpool FC. Then sometimes you have to suffer, but very often, thank God, in the last few years, we had really moments where we could celebrate together without being together. And that's something what gives each life a lift. So I feel a bit sorry for people who are not interested in football, to be honest, because they don't have that moments. But hopefully they get that from other parts, from music, from whatever, arts. But in football, it's my best way to come together, to be honest, with the whole world, enjoy life, and be focused for 95 minutes only on a football game, because that's allowed. After that, you have the normal problems back, the usual problems back. But in these 95 minutes, it's allowed to dig in, focus, love it, feel it, and celebrate it.
Thank you. And one final last question to wrap for Bill. What parting words would you have for the delegation who's gathered here in terms of, from your experience in business as a senior leader, what words of advice would you give to young entrepreneurs, young leaders? What would be, in a very short couple of sentences, what would be your parting thoughts be?
Yeah, right. The most direct advice I could get is to be enthusiastic. Whatever idea you got, whether it's the latest fintech idea or a partnership idea or supporting something else, just be enthusiastic about it, because that positivism will rub off on the people you work with. It'll rub off on the people that you want to partner with or that you want to sell to, because you have the ideas, right? Our listeners here today, they have the ideas. They have they're looking for maybe some sponsorship or some money, but be enthusiastic about it and show it.
Sure. So I guess what we gathered from here today, for one, Jürgen from the world of football and sports, Bill from the world of finance and in the private sector, for myself in government. Clearly, the key thing is, let's be curious. We can all learn from each other. There's a tremendous amount of learning to do, and technology affords us that as well. But I think the key thing is be curious, be enthusiastic, and just keep going and keep trying. So, I mean, while the world is, it's not melting down around us, but it's complex, it's difficult, but I think we seize initiative and just go forward as best as we can. So, Bill and Jürgen, thanks very much for joining me here. Thank you very much.
Welcome.
Thank you.
Good morning, good afternoon, good evening, hello, and greetings to you from wherever you are joining us around the world. Welcome to the Afro-Asia FinTech Festival 2021. We are coming to you live from here in Nairobi, Kenya. Thank you very much. This is part of the Singapore FinTech Festival, and our theme here is Sustainable Innovation for an Inclusive Digital Economy. Now, today, you will hear from leaders in various fields on technologies that will power Web 3.0, and of course, this festival coming at a very important time in the world when this is the year of climate action, and COP26 currently still taking place in Glasgow, Scotland. So we'll be hearing quite a bit around this. Now, as you know, since the inaugural festival in 2019, the partnership between the Central Bank of Kenya and the Monetary Authority of Singapore has provided a great platform for engaging and collaboration between various players in the financial sector, and this year will be no different. We'll be hearing from various leaders on many of these topics that I've already highlighted, and we look forward to having them here with us and having your engagement as well. And so to start us off right here at the Afro-Asia FinTech Festival, it is now my pleasure to invite Mr. Sopnendu Mohanty, who's the Chief FinTech Officer at the Monetary Authority of Singapore, to open the Afro-Asia FinTech Festival. Mr. Sopnendu?
Good morning, Kenya. It is a great pleasure to talk to all of you from Singapore at the Afro-Asian FinTech Festival. This has been a journey for both the countries for almost now 3 years, the third year we're doing here. I'm always excited when it comes to Kenya, and I have a very emotional and a strong relationship, personal level, at the ecosystem level, for what goes in Kenya. And we always find an opportunity to bring both countries together on the work we do in financial services. As a testimony to that, we recently did a paper called Foundational Digital Infrastructure, where Singapore and Kenya and 4 more countries came together and put together a white paper of explaining why it is important for countries part of the economy if they have their foundational digital infrastructure right. And the reason we chose Kenya, because Kenya has been a shining example of how to build public good in their own journey of tech, finance, and payment innovation. So having a great partner like Kenya in part of the fintech journey is always an opportunity and a pleasure for us in Singapore. Now, with that, we did this year at the Singapore Festival. We spoke about, and we are speaking as we have one more day to go, we are talking about Web 3.0. And I want to say something about Web 3.0 today, because that's the future of internet. And this is how the internet is going to shift from a current internet model where you have banks digitized on the internet, you have commerce digitized on internet, you have government services digitized on internet, and each of these institutions have data, user ID, password, and they talk to each other. Some cases they don't talk to each other, and that's good. But in some cases this has become too big, a lot of data getting controlled by large institution, and it is causing a lot of issues around privacy, data, consent, and hence the engineers, the innovators have come up with this new Web 3.0 construct. In a strange way, it actually goes back to Web 1.0, where the original internet was built around this permissionless, computers connected to each other, talking seamlessly without you realizing what goes underneath. So now in Web 3.0, the idea is very simple. The participant in the internet would be now far more in control on their own data. So they are going to get the data, they're going to manage that data, they're going to share the data, but it is the users who are going to do that. So the power of user-centric is something, a distinct shift from Web 2.0. So we are moving from an information-centric to interactive-centric to user-owned centric in Web 3.0. And why do I'm sharing this? Because the fintech industry, the financial industry are going to leverage on this new architecture to build financial services, which will go and define the future of finance. And there are examples by which you can remove intermediaries in the between two parties transacting, hence reducing cost, improving privacy and data protection. So Web 3.0 was the focus for this year of SFF. I strongly encourage all our participants from Kenya and in broader Africa to, at least if you don't hear the content live, go back and see the content offline. And I can tell you one thing: you'll get far more enriched in this process of understanding how the future will look like with this new exciting technology called Web 3.0, where there are components of AI, 5G, machine learning, there are smart contracts as part of the new technology. On top of that, we have introduced something which I think all of you would love, is that something called Web 3.0 certification program. As you watch this SFF content, you can go and participate in this exam. It is a 90 question. You have done over 3 modules. Day 1, we talk about 30 questions around designing application on Web 3.0. Day 2 is around building application on Web 3.0. On day 3 is about sustainability, social impact of Web 3.0 in financial services. You watch the videos. There are some content out there. Take the exam. The National University of Singapore and Asian Institute of Digital Finance will issue a certificate live if you cross 60%, if you answer the 60% questions properly. It comes at a very nominal price, something like $7, but you get a very credible certificate in the US. I do encourage all of you to participate in the program. And if you are from government services, if you're from NGO, or any multilateral agency, it's free for you, but you have to pay a little money to get the certificate. But I do encourage all of you to participate. It is important for all of us to understand the basics of Web 3.0, because that's the future. That's where the world is shifting. And Kenya, being an early adopter of new technology, you are perhaps best suited to understand this before anybody. So you can take advantage of this new technology and hence push the spirit of innovation. Now, to conclude, I would like to say that Singapore and Kenya will continue to partner strongly. We have remarkable initiatives planned for next year. In the space of API exchange, we just launched a product called CheckFin, which will improve the credibility of fintechs and banks working together. I hope we can introduce to Africa this particular initiative. We are also introducing a lot of platform around green finance. I'm absolutely sure that can be also another platform where Kenya and Singapore can participate, and the broader Africa, Singapore can participate, the broader Afro-Asia can participate. Lastly, the effort around small businesses, the Business Sense part of the Proxtera product, this is where we are bringing Africa and Asia together on a shared platform to connect small businesses. I hope that's also an opportunity for us to work together. And I want to conclude by saying we have great plans for Kenya next year. We have great plans for Africa next year. We will come to Africa, hopefully things get normal, and we will physically connect and have a little more bigger forum to discuss ideas, share ideas, and find opportunity to collaborate. With that optimism, and I'm absolutely sure the Afro-Asian FinTech Festival will be very meaningful to all of participants who are going to join and enjoy the rich content, and hopefully that will catalyst some of the opportunities we can create for ourselves and for our fellow citizens and fellow friends around the world. With that optimism, thanks for hearing me, and best of luck. Have a great event.
So as we're learning throughout this festival, one of the technologies that will power Web 3.0 is artificial intelligence. Now, Visa has been an early adopter of AI, and a number of questions come up. Is there a one-size-fits-all approach to building AI solutions? And what are the definitions of fairness in building AI models? And in what ways can they continue to promote inclusivity and security for many of the models that are being built today? This next session gets deeper into those issues with Dr. Nuri Perswani, who's a Senior Manager for Data Science at Visa and is an AI practitioner herself with quite the work that she has done in this field, contributing to white papers on the topic of AI fairness with prominent industry players such as Microsoft, Standard Chartered, Deutsche Bank, and the Singapore government. Dr. Nuri?
Good afternoon, and thank you very much for having me at the Afro-Asia FinTech Festival. Today, I would like to provide you a perspective on a topic that is very close to my heart, on building trustworthy AI. I am a data scientist and AI practitioner, so I would like to provide you a very practical perspective on how organizations of all sectors and sizes could apply trustworthy AI principles in their workflows. To provide some context, Visa is an early adopter of AI. We have been using neural networks since 1993 to detect fraud, and now artificial intelligence is being harnessed across multiple areas for business, including product, technology, and research. To give you some examples of the business benefits of AI, currently we have used AI to prevent an estimated 25 billion a year loss through fraud. In addition to that, there are many other processes such as transaction approval, cybersecurity, and product marketing use cases that leverage AI to make services more efficient and protect customers. However, one of the things that we must do when deploying AI services to the public is to put ourselves in the shoes of the people that are going to be affected by the model decisions. We must always strive to protect the customers and those vulnerable from the dangers of badly designed AI. So at the end of the day, nothing is more important to us than upholding the trust of consumers who need to have full protection and benefit from the services we provide. So with that, I would like to provide you a practical example of how AI ethics could be applicable in the case of product marketing. Let us take an example of a card issuing bank who may be looking to understand which customers are more likely to transact online. In this product marketing case, the business opportunity for a financial institution is to grow revenue from e-commerce transactions by sending offers to those customers that are more likely to respond. However, it is very difficult to do this manually, so this problem set provides a great candidate for using AI to automate some of the decision making. The idea is that we may want to use AI to predict which of the cards that are more likely to respond based on historical data, and then target maybe a subset of those cards for online offers. However, even in product marketing, there are many ethical considerations that we must think about. There are some challenges that are very much determined by the product and the audience that the service is being targeted to. In the case of denial of services, we have seen in the news that women may be less likely to be shown advertisements for high-paid jobs, given that historically the data is skewed towards male populations. And in financial inclusion, if we were to only target groups historically that are affluent, then that would also create higher societal disparity. So denial of service is something we must be very worried about when looking at deploying AI solutions. At the same time, we must also protect vulnerable groups from the harms of badly designed AI. To provide examples of this, recently there has been a lot of scrutiny on showing social media and weight loss ads to vulnerable groups like teenagers. So we must always look at ensuring that the right groups are included, but at the same time that the vulnerable groups are protected from the harms of badly designed AI. So with this, we say that there is no one-size-fits-all approach to ethics in AI, and in the context of product marketing, we have to consider the materiality and the impact to the customer before we build a solution. So here I would like to provide a set of questions that development teams, such as data scientists, could adopt to find a more user-centric approach towards building and deploying AI solutions. Firstly, we must ask ourselves who are the customers and how should the model be explained to them? And ultimately, how does AI impact their lives? And based on that, the technical architecture of the models would be designed in such a way that consumers are protected. In addition to that, data inputs and model inputs must be appropriate for the use case, and model bias should be a consideration depending on the fairness goals. Finally, we must also understand the governance side of models and ensure that post-deployment we have a mechanism or a safety switch if something goes wrong. Taking all of these considerations in mind, let's take a deeper look at fairness. So currently, most AI practitioners train models from historical data, and most of these models deployed in the environment are fairness unaware. And really, there is no one-size-fits-all approach towards ensuring fairness. However, what we need is a transition in the field to fairness-aware AI. Within fairness, there are multiple definitions, so we will talk about them in detail. However, sometimes, in some cases, we may want to maximize the needs of individuals without trying to achieve perfect societal parity, depending on the product or service promoted by AI. Whereas in other cases, we may want to achieve group fairness or demographic parity, especially when financial inclusion is desired. So this is why the problem has been extremely hard to crack. Models have to be fairness unaware. However, we need to come up with an approach that's holistic enough. There are currently several hundreds of definitions of fairness and mathematical representations. However, it's not straightforward how to apply a universal formula to achieve fairness. This is why we must consider it on a case-by-case basis and adopt a more human-centric approach. So with this in mind, the Visa Data Science team entered the Global Veritas Challenge, which was organized by the Monetary Authority of Singapore. And we adopted a stakeholder-centric approach towards AI fairness. So the idea that we were trying to provide is how can we build models with shared accountability and governance? Because it is not just about data scientists. So data scientists or AI deployers like myself would typically build models. But then in financial institutions, we have deployers or model owners, as well as oversight teams such as model risk management, who also ensure that models that are deployed with AI are safe. And all of these stakeholders have a shared accountability in protecting the consumers from the harms of badly designed AI. So with this in mind, we pitched a fairness toolkit as a solution that would enable all three stakeholders to achieve better accountability and fairness. So for AI developers, we actually built a new toolkit with tutorials on product marketing to enable them to apply fairness concepts more intuitively. For AI deployers, we're looking at visualizing the outcome of fair versus unaware AI and looking at how long-term financial inclusion can also provide revenue to the banks by improving the customer diversity. And oversight teams can also benefit from better audit trails and accountability and transparency in their AI solutions. So keeping all of these considerations in mind, we would like to conclude that ethics has to be at the core of all of the business services that we deploy. And it's not just the legal requirements, but also our strong organizational values for consumer benefit and protection, accountability, fairness, and inclusion. In addition, it is not difficult to have a one-size-fits-all because even there are multiple frameworks. So we need a top-down approach where leadership supports and also bottom-up empowerment from AI practitioners like myself. And finally, we have shown that diversity and inclusion is critical to ensure that models in the future also consider this to avoid bias and discrimination. So both in our personal and technical approaches, we must always strive to achieve better inclusion across all of the services that we deploy. Thank you very much for listening. Asante sana.
Thank you, Dr. Nuri Paswani, for such a detailed presentation and indeed learning a lot from you and the work that's been done at Visa, having been one of the early adopters of artificial intelligence, which we're saying is really going to power Web 3.0, which is the future of internet, and obviously will have a great impact on the future of the financial sector, as we heard from Mr. Sopnendu Mohanty at the start of this. And so let's get into a deeper conversation on the same. A panel discussion on Web 3.0 and what it means for the future of banking and payments in Africa. To moderate this session is Mr. Mara Cook, the CEO of FSD Kenya, who also has been involved with many digital innovations, including digital savings and credit, mobile health, pay-as-you-go solar, and mobile banking payments. Mr. Mara Cook takes over this next session with her distinguished panel.
Welcome to this virtual panel as linked to the global conversation around the Singapore FinTech Festival here in Nairobi, Kenya. The title of today's panel is Web 3.0, the future of banking and payments in Africa. And it's within the broader context that we're thinking about sustainable innovation for an inclusive digital economy, which we're going to talk about today with my three fantastic panelists. So what I'll do is I'll introduce each one very briefly and then ask them kind of an opening question to get us started. So Jane, I'll start with you. So Jane Wai is the Chief Information Officer for Standard Chartered Bank, Kenya and East Africa, and has been working in banking and technology for the last 23 years. Jane is also passionate about driving change for gender diversity in the workplace and has achieved quite a lot at Standard Chartered, which we heard about before the panel began. But that's a topic for another panel. So Jane, as a leading global bank, how does Standard Chartered share lessons, exchange ideas about new technology opportunities, and test new tech-enabled banking and payment products across countries and regions within your global network?
Thank you, Tamara, and hello, everyone. Being a global bank, it's inevitable that we will launch products across the group. So what usually happens is we'll launch in one country and then roll out to other countries. And if I speak specifically about Africa, I'll talk about our digital bank. We launched that in 2018 in Côte d'Ivoire and then rolled it out to other countries across the region. Obviously, we have different nuances in the different countries. So by the time it came to Kenya, we had tweaked the product quite a bit. The back engine obviously remains the same, but the features in there are different. And one of the things I must say about this particular product is that we've seen our customer profile change a lot in the last couple of years. We used to have a much older population, but now we have our average age of clients. I see Sandra laughing. Our average age of clients is about 35. So we've seen this digital uptake change a lot of our landscape. We've also seen a lot of our transactions move onto this digital space because, of course, we're dealing with digital natives. So we're dealing in a whole new world. And of course, COVID obviously accelerated quite a bit of it. From a disruptive technology point of view and how we look to the future and what happens in the future, we have launched what we call SC Ventures. And SC Ventures it provides a platform and a catalyst for Standard Chartered as a bank and for other individuals that we can partner with. So we do a lot of partnerships through SC Ventures. So we get to learn about new technologies, what else is out there and what else we can do. And we use it to partner. We also run challenges within the organization where we can get our own staff to give new product ideas and things like that. So we work with what happens from a group level and what we roll out across the region and what we pick from SC Ventures that we can then roll out locally. And then obviously we can start in Kenya and roll out to other countries as well. Back to you, Tamara.
I'll go to Sitoyo Lupokwet next. He's the Managing Director for M-Pesa Africa and has spent more than a decade working on the M-Pesa team, rolling that out across Africa. James just talked about the country-specific context in which Standard Chartered operates. Sitoyo, as you think about the M-Pesa platform, what are those country-specific dynamics that really drive the success or the challenges that you've experienced as you've rolled out M-Pesa across multiple countries now, and also how do you expect those to change in the future?
Thanks, Tamara. And Jane has touched on a bit of that, but I'll just touch on about four of them. And one is on digitization. So the digitization levels across the different countries makes a big difference in terms of what products and services we can offer. And we are seeing customers becoming more digitally savvy. I think Jane has just talked about the younger generation who are digital natives. So we need to look at how to develop products and services related that are more digital. And this brings a part of our network, our telecom side of the business, which is either the 3G or 4G networks that we roll out, and the smartphone penetration across our market. So that becomes a really big a driver for what kind of products and services we roll out. I think the cost of smartphone needs to go lower to reduce the barriers to entry. And then with smartphone, then you can provide the new products and services and better customer experience rather than the standard USSD or the SIM toolkit menu. I think working with the regulator is a big thing. And I think Kenya's success is largely also attributed to the regulator. And it's really important that as an industry, we work very closely with the regulator. As I said, they should know what you're going to launch in the next 12 months. And the reason for that is while we try and impact society, they try and protect society and ensure there's no systemic risk. So it's a great partnership that you can do with the regulator. And we've seen that successful in different markets, and it's something that we will continue to do. I think touching on what Jane mentioned in terms of the new products, new technologies and emerging technology, it was great yesterday listening to the central bank governor talk about next generation platforms, because as technology becomes, cloud native, there's a lot of AI, machine learning, new technology in cybersecurity. How do we ensure that this is available across markets? And as Jane said, it's built once, deployed enterprise. You just cannot do it now and 50 markets and deploy infrastructure in all markets. It's not sustainable, and it's not cost effective. We see that with big tech, across the world. They don't deploy in 200 countries infrastructure. So I think it's really important that across the African continent, we look at how to embrace these new technologies to lower the cost of providing services. I think the last bit is the ecosystem and the partnerships. We need to really open our systems and encourage partnerships, encourage players such as Sandra Dream to be able to innovate around our platform. So we are very looking towards ensuring that we have open APIs and so on that really drive inclusivity as well as the future of digital payments in Africa. Thank you.
Thank you, Sitoyo. And last but not least, Sandra Yao is the Senior Vice President Africa at Thunes. With 15 plus years of experience in the payment industry in Africa, Sandra is extremely passionate about working with industry leaders to continue shaping the payments industry into a more inclusive ecosystem in Africa, which is really what Sitoyo just spoke about. So Sandra, how has Thunes' approach been unique in really trying to solve the challenges that we're talking about in the future of banking and payments today?
Thanks, Tamara, for the question. Hi, everyone. It's a pleasure to be here with Sitoyo and Jane. And thanks to the Central Bank of Kenya for the invitation as well. As Thunes, we empower businesses and their customers around the world to participate in the global economy by making cross-border payments faster, transparent, and much more affordable. Payments is really an integral part of our lives. It is really not a luxury, but a necessity. We are constantly making payments. We buy our coffee, we go to supermarkets, we pay our school fees, and Thunes, we are here to make payments process to be more seamless, painless, and frictionless. Now, how does that make us really different? I would say two major things, really. We have always been focusing on creating a global interoperable network. Currently, we cover about 110 plus countries, and in Africa alone, we cover 33 countries. That's our platform is secure and providing the highest standard of quality of service. Second thing is, it's not just our business that is really global. Our people are as well. We have about 35 different nationalities across 5 continents. We are global, yet very local. Our team is very diverse, creative, and empowered. I think Jane mentioned about her clientele average age is 35. I think our team's average age is 35, which we have a lot of young people, and some of them are 20-year-olds and very innovative. So we are focused by providing local expertise by working closely with our partners on ground to ensure their growth and their needs are met. Thank you, Tamara.
Thank you, Sandra. And it's hard to believe that it's been more than 2 years since many of us were together at the inaugural Afro-Asia FinTech Festival, which brought people from all over the continent and from really all over the world to discuss the importance of fintech and the future of payments and banking. And I think the Central Bank of Kenya and Kenya as a country has been a real leader in this space, in innovating and finding new solutions that really work for the youth and the women and entrepreneurs and all the different market segments that we're going to be talking about today. But as I think back to that time, not only the Afro-Asia FinTech Fest, but also the Singapore FinTech Festival, where Kenya went and really presented what it had to share with the rest of the world. We've come a long way since then. And a big part of the journey over these 2+ years has been this global pandemic. And as we've already discussed a bit, COVID-19 really did slow down the movement of people and goods. But as Sandra said, it may not have necessarily slowed down the movement of money. And so how do each of you think about how this global pandemic has changed the way we move money, the way we deliver banking and payment services, and how are these changes going to continue into the future? I'll let you unmute to decide who goes first.
Well, I'm happy to go first. Very great question, Tamara. I think we have, as a company, as Tunes, we have always been focusing on digital payments solutions, even before the pandemic. 60% of our payments go into e-wallets like M-Pesa. The pandemic has only accelerated the digital adoption across the globe. I'm sure Dean has seen it, M-Pesa has seen it, we have seen it. Right? Most of the incumbent providers have begun a very strong focus on digital channels, and most likely this shift is here to stay. I think during the past 2 years, the most common statement is, "You're on mute," because we are all on Zoom, on Teams, on Google Hangouts having meetings. The movement of people has maybe slowed down, but the business is not, and the economy is really not slowing down, and people are sending more money back home. I think one of our top customer, Remitly, a pure digital MTO, they have seen their shares rise by 13% on the first day of them going IPO, and its market value reached $7.8 billion, just from $1.5 billion the year before. I think, again, digital transformation, digital focus is the future, and we really need to make sure that we are building platforms and networks to accommodate the needs. The speed of internet is absolutely important. Access to smartphone, as Sito you mentioned earlier, is continue to be a major drive for people to adapt this new technology and new services. Thank you.
Great.
The one thing you must say about Kenyans is that we're very resilient. Yes, COVID came, shops were closed, operating hours for banks changed, but that didn't change business. We quickly moved on to the internet. So you found a lot of people who maybe were not selling digitally, suddenly moved to selling digitally. So you had a lot more people selling their products on Facebook, on Instagram, and all those spaces. And obviously that is followed by money. As a bank, I did mention that we had a digital bank. We have a digital bank rather. And we've seen about 95% of our customers' acquisition coming through this platform, which means people don't have to go to the bank anymore to fill out forms. We have over 60% of our wealth management products, and a lot of this is insurance, travel insurance, house insurance, health insurance, online bonds and mutual funds. A lot of that moved online, and we are seeing 60% of our transactions happening in that space. And businesses are also not being left behind. We have our straight-to-bank system that we use for corporates. And again, a lot of our transactions, it's grown on those spaces. So what we found is that, yes, COVID came, yes, COVID stopped people moving around, but we then moved from the physical streets to the digital streets. But like Sandra says, and then Sito mentioned it earlier, we do have to deal with the issue around access to internet, or good internet, if I can put it that way, and affordable internet, as well as having the smartphones or having the laptops, because we did see a crunch in that space. A lot of our global suppliers suddenly, you couldn't get laptops anymore, and so you sort of had to work with what you had. So those are some of the barriers and things that we need to address just to make sure that we are able to continue on these streets. And yes, we are not going back to the way things were before. I see a shift, and I don't see us going backwards. Like I said, we're dealing with digital natives. A lot of population here, is in the youth, and they're not going to go back to a bank and have to fill out a form, to do something. We've changed. We've shifted.
Sitoyo?
Just picking up, I think for us, we looked at it in, three different ways. We echoing what the other panelists have said, COVID has been the biggest accelerant for digital services, especially digital payments, as businesses change. At the beginning, we looked at it from three different levels. One was the response stage. This is where we worked with the regulators, such as Central Bank of Kenya and other central banks across our footprint, in lowering transaction fees to be able to cushion customers during this period of time. We also worked with governments to disburse funds to the vulnerable within our society. Things like Kazi Mtaani in Kenya, as well as in areas such as in Mozambique, we actually did disburse government funds to the vulnerable. We also now, on the response stage, as the economy started to open up, we started looking at how do we support SMEs and micro SMEs. To what Jane has said, how do businesses start opening up and getting, take advantage of the opportunities as people go digital. So we worked on, digital onboarding, self-onboarding for merchants, and today over 30% of our merchants are actually self-onboarding. And then we launched what we call the business app or the business super app for SMEs, and this enabled them for the first time to have remote payments. They can see what's happening in the stores. They can make disbursements remotely while working from home and collecting money from the various digital channels that they were selling. On the third phase, what we are seeing now is the reimagine phase. This is a permanent change that we are seeing in terms of how businesses are operating, and especially moving stores that were physical and giving them an access to virtual stores. And then Jen mentioned this. So somebody who's in Nairobi now can actually sell, to the whole entire country, in this new e-commerce space. So we are providing them with those kind of channels that businesses can now grow beyond just their local footprint. And we'll be seeing a lot of products and services emerge. Today, just to give you an example of what Jane said, Jane could have a wealth management solution, and you've got a great product in your app, but we could pick that and put it within the M-Pesa, so for example, super app, and then now 28 million people in Kenya can have access to those kind of services. So it has radically changed what we call the target addressable market. So somebody who's small could suddenly has 28 to 50 million customers, as a marketplace. So we're seeing this trend permanent, and we will be looking at new products and services that take advantage of the changes in the way the society is going. Thank you, Tamara.
Thanks, Sitoyo. So,
there's something, Tamara, if I can add.
Please.
There's something Sitoyo mentioned about the regulators and the government, and those are key enablers for us as organizations to thrive. So we do have to work with our regulators. We do have to, and the government, to have an enabling environment that will allow for this kinds of space. Yeah, because if we don't get that, then it sort of doesn't quite work the way we'd expect it to work. And obviously, another thing he did mention about the digital marketplace and so on, we have to work together. StanChat, Tunes, M-Pesa, Safaricom, and every other partner fintech that's out there, because we can't go it alone.
No, it's a really good point, Jane. And I do think that, regulators need to not only think about the traditional parts of the payments, and I really like the way, Sitoyo, you talked about protecting and creating impact, but things like, for example, you talked about digital onboarding of your merchants. If you need to have a know your customer way that can be trusted digitally, and is accepted by the regulator in order to open accounts digitally. And that helps those digital natives. When the very first kind of mobile linked bank accounts were rolled out, there was a requirement for, still having the physical signature. This is many years ago, but we've come a long way since then. And so I think it's important that regulators protect, but also enable the next generation of banking and payments so that we can all share in this prosperity in this inclusive economy. So that brings me to the next question, which I shared with you in advance. And I like to think of the digital economy being inevitable. And I think if anything, COVID-19 has only accelerated that path towards a digital economy in countries, especially like Kenya. However, the inclusivity of that digital economy is not inevitable. And I think we run the risk of those who are digital natives, those who do have access to those digital tools, being the ones who are able to achieve and really seize the rewards from that digital economy, while we risk others being left behind. So as you think about this potential digital divide or the risk of leaving people behind, what do you see as the barriers to a truly inclusive digital economy, and what can we be doing to bring more of Kenya, more of people across Africa and the world into this inclusive digital economy? Sitoyo, do you want to start?
Yeah, thanks, Tamara. I think the digital divide is, it's such an important topic. Whether it's, people with smartphone and non-smartphone, and that divide, people have access to the internet and those who don't have access to the internet. But I think for us, first of all, as a purpose-led company, we start with just how the society, uses our products and services. As an example, in Kenya, today we have 1.4 million visually impaired customers who own M-Pesa. So how do we provide, products and services for them that they're able to use them without necessarily compromising or giving somebody else their PIN number? So, advent of, using new technologies such as dot braille watches and tablets, which we've rolled out, voice recognition software for them to transact, and so on. So I think we need to make sure that all, financial services are inclusive. I think the opening up of our platforms it will enable inclusivity. When we have these open APIs, today we have 42,000 developers within our ecosystem. We're targeted to go to 100,000, which means these 100,000 people are trying to develop products and services to, in different areas. And we've seen companies such as, M-Copper, Solar use it, M-Gas recently for gas. Safe gas in the country that it's you pay as you consume via M-Pesa, and we're seeing more and more the fintech side of it coming on board with products and services that actually drive or reduce the digital or reduce that barrier in terms of the digital divide. Thank you.
Sandra?
Yeah, sure. Thanks, Samara. I think just to build on what Sitoyo mentioned, I think, again, accessibility remains a very key challenge. Access to smartphones, to smart devices, access to internet. I think we have all seen during COVID time. I mean, private school students continue with online schools, but a lot of the public students have been stranded. They are left at home. There's no internet. There's no smart device. They cannot continue with education. So these children would have lost 1 to 2 years. So how do we make this access more widely available, accessible, and affordable? I think the second thing is really when we talk about movement of payments, cost to transact, whether domestically or globally. I think, of course, Sitoyo mentioned they have worked with regulator to reduce, part of the transaction cost, which is great, amazing. And when we look at cross-border payments, cost, especially in sub-Saharan Africa, is the most expensive, as high as up to 17%, which is crazy. So I think, again, talking about collaboration, we want to work together to build solutions to bring down the barriers, partnerships works, collaboration with the central banks, that they have to allow the environment to allow fintechs to play in this space. I mean, to give you an example, that we are working with one of our partners, a big bank in Malawi, FDH Bank. Their customers can go to the bank and send transactions to all the mobile wallets in Tanzania real time, which was not even possible before. So, and we work closely with our partner banks, mobile wallets, to reduce the cost of sending money and to hit the target of SDG goals as low as 3%. I think some of our partners are really championing on that. I think the other part that I want to talk about is really when we talk about inclusivity is gender gap, especially in this banking, payments, and fintech space. I mean, today's panel is one of the greatest that I have attended. For the first time, Mr. Sitoyu perhaps is the minority here. We have a lot of ladies on the panel. Happy to see that. But I think we still have a long way to go when it comes to, you know, gender gap. I think women are massively underrepresented. Report shows that women in fintech industry, that only 26% of the executive members in the banking sector were women, and this figure drops to 19% in Africa. I'm very happy to see Jenny, you know, is paving the way, continue to do the good job. And especially in the tech companies, even worse, and women only make up to 14% in the executive committee. So I would like to see more and more inclusive and to bridge the gender gap.
Thanks, Sandra. Jane, over to you.
Yeah, sure. Both Sandra and Sitoyu have touched on some of the barriers, so I wouldn't delve too much on that. What I'll touch on is what we're doing as an organization. And one of our commitments within Standard Chartered is to improve the lives of 1 billion people and their communities across the globe. Locally, we have the same goal in Kenya. So what we're looking at is supplier diversity. Let's get more women suppliers on board, more youth suppliers on board, so that we can make it easier, give the opportunity that is there to others to help bridge that gap, if I can call it that. Specifically, we have a program with the young ladies. It's a program called Goal that runs across the group. But in Kenya, one of the things that we've discovered, or one of the things that we're doing with these ladies, is trying to help them improve their businesses. We've talked about how hard it is to have the smartphone, or how hard it is to get data, or, well, it's expensive for the kind of business they want to do. So we're setting up a computer lab for them, a small lab where the offices are. And we want to look at training them on how to sell digitally. You know, it's a lot different when you have a shop and you can call people in, as to when you have something on the screen. It's got to look appealing. You've got to get a way of, getting people to buy your product. So that's one of the things we're trying to do, and then obviously hope to scale that up. But that's where it starts. You've got to start somewhere. Try and get out there and bridge that gap. I mean, it's a big gap, but if you don't do anything, then it just always remains a gap. So how then do we go on to the next step, which is how do we make it more inclusive for people? I've talked about our goal to uplift 1 billion people across the globe. We have businesses in Kenya that shop in China or shop in India. We are in Kenya, we are in China, we're in India. We want to see how we can make it easier for us to bridge that gap. So I can have a group of suppliers in Kenya or vendors, and I can connect them to partners in India, China, or wherever it is in the world, and they can get access to good products, access to good financing, and they can bring in their products here. So we're looking at it from different angles as to how we then become a bit more inclusive as an organization. And hopefully we should see change in the years to come.
Well, thank you all. I think you've all raised many of the good barriers and shared many good ideas about how we can close that inclusivity gap and really bring more people into the digital economy and the opportunities that are there. One area that we haven't discussed very much so far is actually the connection between the physical and the digital. I've heard it called the phygital. But if we think about the access to cash in and cash out points, for example, in Kenya, the reach of mobile money and bank agents is quite wide, but there are still people who live a very, very long walk from those points. And so then it limits their ability to really fully seize the opportunities of using digital payments if there's not a way to get their cash in and out of the system. And so those are some of the things that we can be thinking about. The other thing I just wanted to bring up, I'm sure you're all familiar with the FinAccess research that the Central Bank of Kenya, Kenya National Bureau of Statistics, and FSD Kenya partner to deliver. And the research has recently been completed here in Kenya and hopefully will be launched publicly soon. But in the 2019 FinAccess data, we looked at what is driving exclusion in FinAccess. What is preventing people from either accessing or using financial services or using them to their greatest advantage? And we looked at even not necessarily people who were just excluded, but people who were underserved. And so we looked at farmers, for example, We looked at urban retail traders and just some of the segments in the population who may have access but aren't fully using financial services, banking and payment really to their full. And youth, as you've said, Jane, was one of those categories where youth, even though we think of them as being digital natives, sometimes it takes them a little while to actually enter the formal financial system after turning 18. And then with women in Kenya, we actually have one of the lower digital, gender gaps on financial access across the continent. But low is not good enough, as Sandra said. And I think there's a lot more to make sure that not only is that gender gap reduced, but that women are actually getting the valuable financial solutions that they need. Well, let me move to the next topic that we discussed already a little bit. Sitoyo mentioned Mkopa and some of the gas partners that you're working with to reduce, to provide more green solutions. And concurrent to this event that we're having here in Kenya and the Singapore FinTech Fest, COP26 is happening in Glasgow. And so there's a global conversation around climate change and what the impact of climate change is for a country like Kenya, and how finance, banking and payments can play a role in reducing the impacts of climate change, helping to mitigate those risks, understand those risks, mitigate those risks, but also reduce future climate change. And so would love to hear how you see banking and payments playing a role in that. Jane, do you want to start?
Sure, Tamara. One of the ambitions that the Standard Chartered Bank has is to be the most responsible and sustainable bank. And we're looking at generating income from sustainable finance. Our ambition is to achieve net zero carbon emission by 2030 in operations and increase our financing by 2050. One of the things we've done in Kenya, and this was last year, we had a partnership with Davis and Shetlev, and that was to help homes and families transition to clean water and clean power. And we will see a lot more of those kinds of partnerships in the years to come. Because of course, we really do need to save this environment because but when you listen to what's happening with global warming today, I mean, almost every day there's something happening. Yesterday, I was reading about floods in Chennai. The other day there was fires. The other day there was all sorts of things happening. So we really need to take care of the environment that we live in. And as a responsible bank, we have made that commitment. This last weekend, we launched a partnership with Arboretum, and we've committed to plant 1 million trees in 3 years. So we will see a lot more of the things that are going to be happening and the partnerships and a lot of the partnerships actually that we're going to have as an organization as we achieve our goal of achieving net zero. We can't do it alone, obviously. So we have to work with partners. We do have what do you call it? Solar panels on our ATMs, especially our remote sites. And we are working with partners who are of like mind. Yeah. So it will be either partners to deliver or where we situate ourselves. We will work with people who are like-minded like ourselves and just aim to giving us a more greener and more cleaner economy. So we will see a lot more green bonds, green trade finance, a lot of sustainable finance over the next couple of years coming from ourselves. And we're uniquely placed because we can help companies become more green because obviously it takes financing. So we will work with companies as well who do want financing to change their operations.
Thanks, Jane. Sandra?
Sure. I think for us, or at least for me, I think moving to digital and away from printing cash is definitely the future. I think a lot of central banks are looking at to issue e-currency. I mean, Nigeria led the way, Ghana is preparing it, and a few other countries. I think we all know COVID accelerated digital, adoption, and it's gonna be here to stay. So maybe just to share a bit of personal story. It doesn't help as a Chinese living in Kenya. In China, we pay everything with our phone. I mean, even the people who used to pickpocketing, they lost their jobs. No one has wallets anymore, right? And in Kenya, we pay everything with M-Pesa. So I went to Dubai for a trip, and I wanted to take my team out. I go there and we finish. I want to pay. I remove my phone. I don't have my wallet. I don't have my card. I could not pay because I thought in my mind, I'm still in Kenya. I could pay from my M-Pesa wallet. So I think as individual, as company, we just need to be very deliberate and conscious that make payments digital as much as we can. I know that everyone says cash is still the king. So we all need to collaborate. We are fighting cash. We're not fighting each other. Collaboration and making sure that we are deliberate about digital payments, adoption is the way to go.
Thanks. Sitoyo.
I think great points by Jen and Sandra. For us as a sustainable business, Safaricom, I think we're the first company to have gone, to release a sustainability report quite a few years back, and we're really, keen that we drive our business in a sustainable manner. When you're looking at, similar to what Jane talked about, whether the ATMs using solar, we're looking at for our thousands of sites across the country, how do we put them on cleaner energy, whether it's wind or solar powered for our sites. I think the part on e-commerce and travel is really key for now, an SME to be able to buy products and services, let's say, for example, from China. China is still closed, but that does not stop businesses from ordering, whether through AliExpress. We've just recently connected interoperability with Alipay wallets, so that means when it does open up, then you can be able to use M-Pesa sort of quote unquote in China, and so on, so that you avoid that part of traveling. I think interoperability will be key, whether it's with Tunes or Standard Chartered, to enable our partners, or customers travel. I think Sandra mentioned, hard traveling to Dubai, not being able to use M-Pesa. I think that's something that's going to change through partnerships, whether it's partners such as Visa, enabling that part, or what we call M-Pesa Global, to it, so that if I go to London, I could be able to pay M-Pesa, on the underground instead of using an Oyster card. And those are the that part of partnerships and ecosystem that we're looking at developing through interoperability to ensure that wherever you travel, then you're able to pay with whatever wallet that you do have. But I think the ability to embrace the new digital channels, as Jane said, and then allowing somebody from the comfort of their phone to actually transact and do their business rather than take a plane and travel far and wide to make purchases. And I think we will be seeing a lot more of that. I mentioned earlier about the open APIs and enabling the fintech community to take advantage and roll out products and services that are sustainable. And we'll be looking at supporting those businesses in it. And two examples, that we've seen, young women, Sandra, fintechs. There's Lami and Quara, who won the first hackathon, the Afro-Asia FinTech Festival, 2 years back, and you see their growth and how we, many partners are supporting them in the sustainable business. It is fantastic. Thank you, Tamara.
Thanks, Sitoyo. Well, we've had a very wide-ranging conversation, which I think is appropriate when you think about the future of banking and payments. I don't think any of us who, when we started our careers, would have seen where banking and payments would be now. And it's hard to predict where they're going to be in the next 5, 10, 15 years. But I've asked you to do it. So before we met, I asked you to make 2 predictions. One is a risk that may be bigger than we expect. We've talked about some of the risks and barriers already, but which risk do you think is really maybe being underappreciated in terms of the impact, outsized impact it could have on the future of banking and payments? And then on a more hopeful note, what is the one opportunity, the digital transformation that you think could have the most impact to address some of the challenges that we've been discussing today? Who wants to go first?
I can go.
All right, Sitoyo, go for it.
I think for me, it will be cybersecurity will be the biggest, risk that we do face, and this is as we become more interoperable, how do you ensure that we protect the ecosystem across the multiple partners that we do have? How do you monitor that? Because I think without the system being safe and secure, then the trust will not be there for customers. So I see that cybersecurity, AML, and data protection as just one and the same in terms of them. I think from the exciting bit is the advent of super apps as a new emerging, big topic item. And as M-Pesa, we're a two-sided network, and we've got started the business super app under the consumer super app, and this enables us to play in a large ecosystem by being quote unquote the Google Play Store of Africa. So we'll be keenly looking at that development of super apps, and you're seeing that more and more being talked about. And this came from Southeast Asia, from partners such Grab and Alipay and WeChat, who actually innovated around this space. Thank you.
Jane?
Sure. Thanks. Like Sitoyo, in my initial thoughts on the biggest risk was cybersecurity. And I had a conversation with my colleagues about it. And I said, guys, what do you think is the biggest risk that we have? And I said, I think it's cybersecurity. And one of my colleagues says, yes, it is, but have we thought about data sovereignty? Because we're all moving to the cloud. And the cloud is good, don't get me wrong. But we are moving our data out of our countries and into other countries in a large scale. So then that becomes a risk at some point. Will our data be subject to somebody else's laws and regulations which are not similar to ours? So that does become a risk that sits at the back of our minds as we get into this digital journey where we move everything to the cloud and to different countries across the world. But of course, it's not always doom and gloom. There is a bright side of what's happening in the technology space. And for me, I think one of the biggest things would be machine learning and deep learning. Today, we don't always have a 360 view of our clients. And once we do, I think it'll open up the world to so much more, because then we become a lot more intuitive on what we offer our clients, because then you can see everything they do. Today, as a bank, you probably only see what I pay through the bank. Sitoyo sees what I pay through M-Pesa, only doesn't see what I pay through the bank. If I'm using Tunes, they will only see what I transfer on mobile money. But imagine if you could see all the three spaces in which I operate. Then you can give me the right kind of products. Where am I going? What am I doing? And then that would make it so much better, because then in this digital space and in this world that we live in, it'll make it so much easier if I knew my clientele. Who are they? Where are they? Where are they transacting? What are they doing? What are their interests? Then I can curate a product that works for them. So for me, I think that's the big thing. Yeah.
Yeah, no, those are important risks and opportunities, Jane. And I think, as we talked about earlier, the risk of, for those who are not yet included, their digital footprint just isn't as 360 as that, right? And so how do we capture some of that data that isn't yet digital to ensure people, again, aren't left further behind? And how do we also make sure that we're protecting that digital footprint so that people are not being taken advantage of? And I think the data protection laws and those kinds of things are important, but it's also important to enable choice, so that not only can that as a consumer, my data belongs to me, and I can port that data to whichever service providers I'd like to seek services from. Sandra, what are your predictions?
I think I will not touch the points where Jane and Sitoyo have mentioned, because those are indeed very important risks that we need to look at. I think sustainability is something that for me is very key. The rise of the technology innovation has added a lot more complexity and new dimensions into the market. The combination of financial products and services and technology is seen in different forms, be automated advice, use of AI, ability to conduct payments through electronic means, and use of blockchain technology. And then, right now what the hot topic is buy now, pay later. I think, are these sustainable? Are we teaching people with responsible behaviors? Do we provide enough financial educations to know, do they know what they are getting into when they get into this type of services? So I think something that we need to think about it long term, especially when it comes to young people who are eager to get into, I want to buy a new TV, I want to buy a new car. And since access has been reduced, I can easily get it, but do I have enough responsibility to know that in 5 years I can still afford and get a mortgage? I think the opportunity I see is, again, we talk about interoperability. When I see the world is, I think we need to have one connected world. Today we are traveling. I mean, before COVID, we were traveling a lot. Now we're traveling less. And I think, we'll begin traveling again. How can we make sure that wherever you go, you can pay with your home wallet, card, whatever financial means that you have. You don't have to switch to the local, or you don't have to now go to the ATM, withdraw cash and make a payment. So I think the bottom line is that I would like to pay for a meal in Singapore with my M-Pesa, or I want to go to Ghana and pay with my Alipay wallet. So interoperability, I think, is the future when it comes to payments and banking for me. Thank you.
Thanks, Sandra. Now, I think you bring up a very important point about the financial solutions being fit for purpose and fit for people's realities. And I think one of the frameworks that we found to be really helpful is looking at both financial health and financial needs, and really seeing, are the banking and payment solutions that are out there helping people manage day-to-day, deal with risk, and invest in the future? And I think, what you're talking about with, for example, responsible use of credit, how does the credit market infrastructure really enable good tracking of repayments and helping lenders to make responsible offers of credit and manage those offers of credit responsibly, but also helping consumers understand, have the transparency they need to be able to compare offers and understand pricing and conditions and all of that. Very important parts. Well, before we wrap up, would anybody else like to make any connections between the predictions or reflections on our conversation?
From my side would be
great. Maybe if I...
Go on, Jane. Go on, Jane.
Ladies first. Jane.
No, I think in deference of the only gentleman in the room, I will allow him to speak first.
Oh, okay, great. Sitoyo, you're honored.
No, I think for me is there've been great discussion points and great risks as well as the opportunities. I think for me, Tamara, it'll be great to catch up next year's session and see what has really come out. But I think key for all of us is working together in this digital ecosystem and partnering and not seeing each other as competitors and ensuring that we have a safe, secure ecosystem.
Yeah, good point. Jane?
Thanks, Tamara. I was actually going to say what Sitoyo said. One of the things that has resonated pretty much throughout this conversation is that we have to work together. So interoperability, partnerships, it's key, because at the end of the day, you can only go so far by yourself, but you go a lot further when you work with somebody else. So I do look forward to having further conversations with yourself, with Sandra, with Sitoyo. Let's see what we can do. Let's work together and make a huge improvement for the country and the economy.
Agreed. Anything else, Sandra?
Just to echo what Jane and Sitoyo have said, I think great panel, great discussion. We do look forward. Hopefully next year we can meet physically together and see what we have done so far. I think collaboration is the way to go. We all agree on that. How do we be more conscious and more deliberate and make it happen? Let's not reinvent the wheel. Let's work together and make the ecosystem bigger.
Absolutely, we can grow the pie, and that's good for Kenya's people, Kenya's economy, and our relationships with those outside of Kenya. So thank you to these fantastic panelists. I've really enjoyed having this. I've almost felt like we were all having a cup of chai together. And I do look forward to being able to have these conversations, not just in panels, right, but in the day-to-day operations of implementing and rolling out this ecosystem that we've talked about. So thank you again to the Central Bank of Kenya for hosting this event, to the Singapore FinTech Festival for connecting and inviting the global community into that conversation, even though we can't travel as we have in the past. And thank you.
Thank you.
Bye.
Bye.
Now, like I said, from the inaugural Afro-Asia FinTech Festival in 2019 to date, we have seen some great networking, collaboration, and working together between various fintechs who've played a key role in all of the festivals that we have had. And Lami is no different. Lami is a Kenyan insurtech that has been a part of the Afro-Asia FinTech Festival since its inaugural in 2019. And I'd like us to hear now from Jihan Abbas, who's the CEO and founder of Lami, on the impact of the Afro-Asia FinTech Festival.
Since the last FinTech Summit, we've grown substantially at Lami. We have increased the number of product offerings that we have in the market in terms of partnerships. We've also recently raised our seed round earlier this year of $1.8 million. On the team side, our team has grown massively. We've grown from 10 employees at the end of last year all the way up to close to 45 today. So there's been a lot of excitement, a lot of growth since then. We've recently launched a partnership with Quara. Quara is a fintech that we actually met during the hackathon a few years ago when we first participated. And it's been really exciting to launch this partnership, particularly because I think our missions are very much aligned in terms of increasing financial inclusion. The SACCO space is a big part of the Kenyan economy. So for us to be able to create relevant products that we can sell through this channel is really exciting for us.
Now, this being the year of climate action, and with the talks that we're seeing taking place at COP26, it is very clear that for every country to achieve the global climate goals, everybody must be involved. That's banks, that's companies, that's private sector, that's public sector, and the investors, and that their way of financing needs to change, and all forms of financing will be required. That's both public and private. And therefore, the question is, what is the role of banks in climate action, both in terms of lending and even in terms of their own contribution towards sustainability and thinking about the future? And no one better to hear this from than from the largest financial institution in East Africa, and that is the KCB Group. But we will want to hear from them what is the impact of investing in green financing, and how do you measure that impact, and how do we leverage, most importantly, on fintech to support climate action. Ladies and gentlemen, for this next session, I am very pleased to introduce to you Joshua Ogara, who is the Group CEO and Managing Director of KCB Group PLC.
Ladies and gentlemen, I'm excited to join you today in this online forum, which is very timely, regarding the role of financial technology in driving climate action. Just to give you a background, our organization is the largest financial institution in Eastern Africa, with assets of more than $11 billion, operating in Kenya, in Uganda, Tanzania, Rwanda, and Burundi. We have a rep office in Ethiopia, and we also operate in South Sudan. For us as KCB, and for many years, we've been very much involved in terms of our businesses, driving sustainability, engaging our own organization. We are actually among the few early members of the United Nations Financial Initiative, Principles of Responsible Banking, many years ago. And we have also signed commitments to net zero as an organization. And what we have seen is the challenges and the changes we see for the environment because of the impact of climate change are very real, especially in our markets. And more so the role of using financial technology or fintech to drive and perhaps accelerate the actions that we have as an organization. And KCB has been on the forefront. And that means that we are able to work with different level of customers, look at the challenges they face. We build a lot of organizational policy around sustainability, screening our customers around the social and environmental management system that we have. We track the review. We have short-term commitments on our climate actions and green lending. And we believe that in the short to medium term, we should be able to achieve more than 15 to 20% of our total portfolio. That is a portfolio of green or climate-related financing in our organizations. And I think that for me is exciting to see what institutions can place. And I'm happy that we're on the driving seat to ensure that we can, and also invested strongly in terms of our technology. And I would say today, if you look at our own portfolio of investments, whether it's on the mobile level of investment, our own platform we launched a year ago for fintech called Vuma, where we can do onboarding, assessment, investment review, lending. I think that's one area, and payment as well has been one area of focus for us. We have specific investment on technology, particularly on small groups. We call them chamas here, so chama facilities that we have, or social lending. We've been able to do that also on green lending for customers in the area of I would say agriculture. So we call it Mobicro. And that technology enables us, in addition to just online onboarding our customers and making those investments possible, as one area of utilizing that knowledge, making it easy to access the financial institutions, and in a way, being able to accelerate the actions you are making as an organization towards climate change. So KCB as an organization, with other colleagues in the world, many banks, signed on 2 years ago on the principles of responsible banking, just to be able to enforce our own commitment for what we see as the role of banks to drive their actions, not just lending, but also even our own activities as organizations. So one is commitments around our signature to the net zero commitment, which we made a few years ago. But also being able to say, how do we treat customers who come into organizations, the product that we normally have? We many times signed on into 8 sustainable development goals. From SDG number 1, we've been spending time on organization, SDG number 8, number 9, 10, 11, 12, 16 and 17, and summarizing them is making sure that as an organization we can be able to build with like-minded organizations our investment to drive change using technology. And that is what we continue to run today. We also do measure the outcome of this investment over a period of time. So it's not one thing to make commitments, but I would say in the industry it's also important to make sure that we have matrices either through our social environmental management programs or integrated reporting. And that gives us a chance to be able to invest and say, are we delivering the commitment we are making? So through either sustainability reports, which we normally issue every 2 years, or our daily monitoring and monthly communications. This is one area I believe you couldn't take climate action alone. My belief is that this is the time to call upon every single stakeholder, financial sector, regulators, partners, innovators, fintechs, to be able to build their business activities. And for us, we're happy to be as a leading organization, on the forefront of catalyzing that. Now, we have many other players in the continent, but I'm happy that KCB remains a champion of ensuring that our technology actions today lead to results through climate action. So the commitment, and obviously if I open it up a little bit more, the impact or effect of climate change can be seen much more in the environment where we are, especially in the Africa continent and more particularly here in East Africa. And so for us, we looked at energy replacement with clean energy as a big ambition for our businesses for the last few years. So if you are going to solar, for instance, as a big area of intervention, we are migrating or investing into solar solutions for all our networks. And I believe that this is one area I believe that the replacement for us can only be 50-50 as we move forward in the next few years. And so whether you look at some of our units, some of our businesses, whether it is faraway branches or even some of our centers here, that's one area of investment we've been able to make. And even in terms of our own investors or customers, we do bring in our supplier engagement where we drive that together as an organization. We also look at our usage because, net zero, make sure that we must reduce our own emission levels. So we do look at our power consumptions, look at our water consumptions. We look at overall the movement of energy that we consume, and we track it. We've been making savings or reductions of between 50 to 20% every year across the networks we operate in, which is significant. but more importantly, to bring in other partners. So whether it's our supplier pool we are using at, whether it's our customers we are engaging today, that value, for me, it must be seen that driving a change for climate action cannot be singular. It's bringing up every single stakeholder and the engagement. And if I look at the investment, particularly for technology, because that is the focus of this, what can fintechs do to drive climate action, is about the investment we are making in various areas of services for our customers. So, and we've, last 2 years, spent more time investing in a very integrated payment platform, a lending solution for our customers, and also saving profile through what we call as a VUMA integrated solution for our customers that brings around payment solutions. And this is important for me. Any customer in the chain, whether it's a customer today who comes in today for a $10 request, or is a large customer today that wants $10 million of facilities, we are able to provide a range of solutions for him using technology. Whether it's internet banking solutions we've invested in significantly in the last few years, and that has been very critical for us because today we are seeing 300% to 400% growth in these businesses of transactions online. And I talked a bit earlier, some areas of excitement when you look at climate actions or green lending is on areas, for instance, today on buildings, on area like real estate, where we are a big lender in that segment. Agriculture is another area, food security, providing for that. So this, I'm very convinced that financial institutions are in the nexus of translating actions through the investment to make sure that those commitments lead to changes either through adaptation, which means current programs are being rebuilt, or through new investments to drive real climate actions. And that, for me, is something I believe that we are finding huge value. There's a lot of learning, obviously, for us. Because part of a year ago, we got ourselves into the Green Climate Fund, a huge facility to onboard customers who are very much deliberate to enhance their investment in these sectors and be able to have projects that basically reduce the impact or adapt the challenges we see today. And a lot of our big customers is about formatting, is about building the knowledge, and also being able to help them profile those projects together. That's an area we're spending more time on today, not alone. We're spending that with the GCF globally, our own capabilities locally through climate actions in Kenya and in the region. And I'm raising those actions that those pockets of change require more collaborators, and KCB is being an anchor for that change and action. So with real examples, for us, we've been in this journey for more than 10 years. So if I look at our own, the other head office we have in Upper Hill, it has been very certified as a green building. So actually one of the first green buildings in this part of the world. You have natural lighting coming in. We are using, solar power to power the building. Obviously, that is one step for ourselves as an organization. But also we've looked at, we have branches, and I can use examples like our Masai Mara branch, which has been fully running on renewable energy or renewable power, or even solar power for a long time. We also a big lender as KCB into projects that deliver green energy or clean energy into the markets. We're very deliberate as an organizations. In many years ago, when we set up our own investment in sustainability and our own policy, and so we drove a specific target of sectors we can lend and the ones that we do not. And that for me is exciting to see. So every part, I would say that whereas today we are focusing on the impact we're facing on climate action using fintech, which is using technology, accelerating, and also we can collaborate more today. So today a customer is sitting in Nairobi or in Singapore or in South Africa today with the same model. We're able to deliver the same level of services for them, especially consumer lending, customers within our consumer space or our retail banking space. That for me is exciting. And I've seen in the last few years, we're also partnering along with many fintechs. So the good thing about this model of our vision is to aggregate different players, whether it's on payments, online payments, whether it's around our agents network we are driving in today, on transport sector, how do we deploy that technology? So in terms of providing those solutions, that for me depends on a model to drive change using investment technologies, making it easier for customers, and I believe ultimately reducing our overall level of emissions and delivering our commitment for net zero. I would say that today it's a very exciting moment for also very historic. In a way, we see the real impact for climate change. These generations, our generations today, and particularly in the markets that we operate. So the reason why we've been committed in this journey for 10 years is, in the long run, there is no choice for not acting. So the chance for non-action doesn't exist today because the impact, whether it's on a difficult weather patterns, whether it's a rainfall patterns are unpredictable today, you can continue to see. And we've committed that today, our green lending proportion of our total portfolio is around 5% or 4 to 5%. Our ambition is to take this to 15, 20% in the next 3 to 4 years. So by 2025, we want to make sure that at least 1 out of 5 of all our portfolios we have are purely today green lending in all sectors, whether it's in agriculture today, so in constructions, transportations, our financial services. That's one area we'll continue to focus on. But sustainability is also very broad. And me seated here is to showcase that many more players in the sector. It's also a running call for many financial services players to be able to plug in into the investment of technology, particularly using financial technology, to be able to drive the changes either through the services we offer, how customers reach us today as an organization, and finally, how we all collaboratively deliver a more expanded sustainability ambitions beyond just climate change. Because Sustainable Development Goals, one of the goals is climate actions, which is goal number 13. So by delivering one of the 13, we actually deliver a much more integrated environment globally and build ourselves, not just in Kenya, but in the region, to deliver our part. And commitments for climate actions today are very, very, today we are starting early days. There are many people we are working with as an organization. I mentioned the United Nations Finance Initiative as one area, or the UNEP-FI as one area of focus. And I see, with that delivery, we should be able to drive the agenda for us in terms of changing the impact that we see. So I say that the future belongs to ones that do. And the choice for us as an institution is not to be bystanders, but is to come and say, this is our drive. Any single investment we're making today is very deliberate towards impacting or improving the level of emissions and therefore delivering a better environment or a better planet for everybody. And KCB gives a real commitment in our journey. We'll continue to do. And I want to wish all of you today a good sessions for today, and I wish you all the very best.
And now for our next speaker, who's Ms. Kendi Ntwiga Nderitu. Ms. Kendi is the country manager for Microsoft Kenya, and in her role, she was responsible for developing and maintaining effective relationships across the company's subsidiaries. And she is here to speak to us about investing in future-proof innovation. Welcome.
Hello, everyone, and thank you for joining us today. My name is Kendi Ntwiga, and I'm the country manager for Microsoft in Kenya. We are glad to be with you here today to talk about investing in future-proof innovation. The digital revolution is changing how banking gets done. Every bank is eager to evolve, using secure and compliant technology to fundamentally reimagine their business. This is innovation with real impact. Impact of changing customer expectations, meeting complex regulations, dealing with new competitors, while compacting cyber threats and inspiring a productive workforce. At Microsoft, our mission is to empower every person and every organization on the planet to achieve more. This acts as the North Star in everything we do. Every product choice we make, how we show up for our customers, how we work with our partners. It's not just a set of words. When we talk about empowering people, we simply mean that with the right tools, anyone, anywhere in the world can become anything they want to be. And so as we look at innovation, as we look at a future-proof banking innovative space, successful digital transformation is focused on 4 areas to unlock the value companies seek. As shown on your screens, These areas are on vision and strategy, culture, unique potential, and capabilities. Secure, trusted, and innovative. That is what we go with as we work with customers. We have helped thousands of organizations on their digital transformation by embracing change and unlocking new value creation. What we have learned is that the ones that are most successful understand that this process is a journey that supports their people to create the value the organization seeks by having a clear vision and strategy, by having a unique culture. We are trained that culture is the only thing that cannot be copied or replicated organization from organization, and hence it is an advantage. By having the unique potential and capabilities as the foundational elements, then turning to technology. So simply put, technology is a tool, people are the focus, and more value is the outcome. When we look at the forces at work that are driving change or driving innovation, we find a number. The first is the employee collaboration and changing work patterns. Financial services industry, the industry you operate in, has its greatest assets as the employees who are the heartbeat of the operations and the customer engagements or services. Whether on site or remote, employees with the right collaboration tools are more effective to partner with each other to address business needs and service customers. In times of crisis, our workplace safety becomes a top priority to protect and keep employees safe. As offices open, there will be need for flexibility because, as we see, we are adopting more of a hybrid workplace approach. The next force that is for driving change is a changing customer expectations. You find that customers expect consistent services and experience across different banking channels. As a result, there is increased pressure for a single brand journey for customer engagement, whether it is digital or in person, and to empower the employees to understand that customers need to be guided through these different services and offerings, regardless of what channel they choose. Digital channels are also more important than ever. As customers have been leveraging mobile, we've seen that the bots have been used as a fast respondents to customers and other online channels. Since in the last 1.5 years, when we've gone through the pandemic, this has actually become more prevalent because people have chosen not to physically go to spaces. So we find that the various channels will be most critical as we move forward. The next force is the cost optimization and legacy systems. You find that volatility in the market and the key economic data shows continued downward pressures on costs. These are set off organizations to identify ways to save on costs and invest in areas to drive sustainable growth. The crisis today has also prompted organizations to reevaluate legacy systems to save on costs while gaining all the modern advantage of a modern system. You find that legacy systems demand for a lot of resources, whether it's human resources or money, in order to be supported. So as various organizations look at that and you wonder, can you at least use a portion of what it is you spend on your legacy systems, retire those, and perhaps pick more modern technologies which will give you greater output. Additionally, the drive for a frictionless customer experience calls for banks to transform their legacy technology to support the new demand for the right experience at the right time, through the right channel. So all of this must tally. Regardless of the channel I choose as a customer, I need it timely and it needs to be the right solution. And for you to have that, you find that you need to start utilizing modern technologies. Siloed dates and systems that don't rate of that fail to communicate with each other keep up the are threat to the business space. While cloud was once considered a major security risk, banks are now looking to leverage the flexibility and scalability of the cloud in a safe and compliant manner. Keyword here, compliant. Then you find the next force is the changing business models. This, if there's an industry that has experienced this, it is the banking industry or the financial services industry, where you find the rise of non-traditional players and fintechs are forcing banks to change their business strategy and embrace new business models that blend third-party products and capabilities with the bank's own products, meaning you're able to actually extend your offering simply because you've allowed the third party to integrate into your own products. The risk of not considering new business models is great. And because of this high risk, banks don't really have a choice, if we could say that. And in order for them to remain relevant, then they have to accommodate the third-party players. Then the key one, which we cannot ignore, is the fraud and cybercrime. As we go digital, the more digital we go, whether it's individually or government-wise or corporate-wise, then we find there is great opportunity for cybercrime. Financial crime is on the rise, with sanctioned individuals and terrorist financiers using increasingly sophisticated means to move money and circumvent protections. Governments around the world are trying to fight back, and a quarter of the banks think cyber risk is a top threat in the industry, and rightly so. Regulators are looking to crack down and penalize any banks that are growing, that delay in adopting of cybersecurity measures. And as failing to find and stop transactions with sanctioned organizations can be catastrophic to a financial organization. And so as you consider this, while innovation and the growth presents a great opportunity, in the good side, it also presents a great opportunity for the cyber criminals, but not to fret, because how can you use technology to fight this? How can you use technology to apply cybersecurity in space? Then, of course, the big one for the banking industry and for the financial services industry is a complex regulatory environment. We find today regulators are the ones who call you into these spaces to have the conversation. So while the industry is experiencing a level of regulatory scrutiny that is unprecedented in its intensity, the same regulators are working with you to simplify this. Indeed, regulatory compliance is having a profound effect on the business models of financial institutions. Therefore, regulatory compliance and risk management remain top priorities as financial institutions navigate the new normal. Data is key to the transformation of financial services, yet how you treat data is subject to regulation. The amount of structured and unstructured data that financial institutions need to analyze has grown, which is a good thing, because when you have all this data, it means the opportunity as well to upsell and to scale is there. And as it grows, as you need to analyze and grow and see the insights into risk management and regulatory compliance, it becomes central and strategic to the industry. Financial institutions that best manage and monetize data will be on a strong path to stronger risk management and improved operational efficiency. So as we've seen this, in summary, the forces that are at work in driving innovation in the financial services industry is the employee collaboration with the changing work patterns, the changing customer expectations, the cost optimization and legacy systems, changing business models, fraud and cybercrime, and of course, the regulatory environment. So if we look at it from a Microsoft perspective, well, if you remember when we started, we said that our mission is to empower every organization to achieve more. So when we look at how do we do it in Microsoft for the banking sector, for the financial institution, financial services industry, then you find some of the scenarios. When we look at empowering employees through teamwork, we do this by improving and accelerating one workplace modernization. Technology in that point becomes a tool, but people drive the success. Improving employee productivity and accelerating workplace modernization by enhancing collaboration. That means we break down the silos and provide secure data access anywhere. This we have done for various organizations around the world, and we can have conversations around this. The next scenario we look at is managing risk across the enterprise. And when we manage risk across the enterprise, we are able to improve risk insights and comply with the regulatory requirements. This then helps you as a financial institution to then comply to your regulator, regardless of where that is, because we are able to look and make it local or customize it to your environment. The next is about compacting financial crime. So at Microsoft, we work with you to protect the bank and its customers while lowering compliance costs, especially in times of crisis. And when you do this, then it means that you're able to actually remain a viable going concern, and you're able to manage the risks that are prevalent with cybercrime. Then the next is we modernize payments and the core banking. This means that there's increased agility to roll out new products and services while saving on costs and moving from legacy systems. Again, as we saw, the cost of maintaining legacy systems can be high. And if you could work a plan to transition from legacy to emerging technologies, which actually achieve more for you, then at the end of it, there's more benefit for the institution. Then finally, we deliver differentiated customer experiences. This is seen by helping accelerate growth by infusing artificial intelligence to create a differentiated customer experience. As we've seen, the customer expects the same kind of experience across different channels, whether it's in person, whether it's on mobile, whether it's internet banking, whichever. They want to know, if I come to you, my experience is the same regardless of which part I choose to work with. So we work with AI to create a differentiated customer experience and minimize call wait time for standardized inquiries. As we've seen, Microsoft is able to mirror and respond to some of the issues that we see in the banking sector. Back to our mission statement, which is empowering organizations to do more. So when we look at empowering, in summary, banking companies to achieve more, we look at trust. That is, we never monetize your data. You own your data, you work with your data, we allow you to innovate with your data, we work with you, we think with you. Scale, we look at how you can scale the industry leading the industry leading cloud scale and infrastructure, industry leading infrastructure and the partner ecosystem, because we have great partners. On top of all of that, we have industry leading scale with over 15 billion invested in cloud infrastructure and more than 1 million physical servers across 54 global regions. So regardless of where you are, whether it is in Asia, whether it is in Africa, in Europe, in the Americas, you find that you will find data centers there. And for workloads or data that must reside locally, then we work with you to differentiate this and to ensure that you remain compliant. Then, of course, there's the security and compliance, where the highest level of commitment to security is we invest in that. Over $1 billion is invested annually in cybersecurity. Our R&D is heavy in cybersecurity. We have cyber defense operations centers. We bring together security responses experts from across the company, across the world, to help protect, detect, and respond. We work 24/7, so you're always in good hands. We have a broad, comprehensive set of compliance certificates that meets over 50 private and government and national, international standards. That said, we do this across different ways. We don't work alone, we work through our partners, and these are partners who sometimes are already in your organizations. So as you think, as you broaden, as you innovate, we're there for you. So claim your intelligent future. As you think about the investing in a future-proof innovation, think with us. Let's work with you. Hopefully you're inspired to claim your future and want to engage us to go deeper. We can do this through executive briefings. We have Microsoft Technology Centers, and we can also have envisioning sessions with you where we where we challenge the status quo, where we see the art of possibility by igniting what is new, looking at what others are doing, how different regions you can leverage that, and then helping you be successful. That said, we're so glad to be here today, that you invited us to talk with you, to work with you as we look at the innovative future. Thank you.
And what a time it is to be having this Afro-Asia FinTech Festival, which is part of the global Singapore FinTech Festival, which, by the way, carries on through to tomorrow. That is the 12th of November, 2021. And it is an interesting time when the world is going through two major issues. One, we can feel the effects of climate change, and there's the COP26 talks. It's the year of climate action. And it is also going through a global pandemic, COVID-19, and feeling the effects of both of these disruptors at a time here on the planet. And this is a great time to be having talks on how this will affect the financial ecosystem and how to continue to center people at the heart of that. And so to close the Afro-Asia FinTech Festival and to speak about the evolving partnership between the Central Bank of Kenya and the Monetary Authority of Singapore and what to expect from this session, the reflections on that, and as we go forward, ladies and gentlemen, please welcome Dr. Patrick Njoroge, who's the Governor of the Central Bank of Kenya.
Excellencies, ladies and gentlemen, good morning, good afternoon, good evening. I'm pleased to join you today after what has been an insightful Afro-Asian FinTech Festival 2021. I'm sure that you have had a diverse and rich menu to choose from, with the Afro-Asian FinTech Festival being part of the largest global FinTech festival, the Singapore FinTech Festival. I'm grateful for the partnership we have had with the Monetary Authority of Singapore since we jointly launched the Afro-Asian FinTech Festival in 2019. Let me also thank our distinguished speakers, panelists, and all the participants who have joined the Afro-Asian FinTech Festival 2021. We meet virtually as we did last year on the backdrop of three evolving themes. First, the COVID-19 pandemic continues to dominate global discourse. However, compared to November last year when we held the Afro-Asian FinTech Festival 2020, the outlook has improved with the rollout of vaccines. The economic recovery remains uneven, with access to vaccines as the fault line between the advanced economies on one side and the emerging and developing economies on the other. Second, the ravages of climate change have been amplified by the pandemic, extending its overwhelming impact beyond the developing world to the advanced economies. Over the past year, we have seen floods devastate Europe and China, while wildfires have scorched the United States. The urgency of acting now has been the overarching theme of the ongoing COP26 conference in Glasgow, Scotland. A flurry of reports released in the lead up to COP26 have the existential threat of climate change ranging from the meltdown of mountain glaciers in Africa to over 100 million people slipping into poverty by 2030. Third, technology and innovations have accelerated as our lives and livelihoods have been changed by the pandemic. The acceleration in digitalization has kept the lights on for essential services, including finance, health, education, and entertainment. Virtual working, which seemed a distant possibility in early 2020 and on the eve of the pandemic, has now become a reality. Against this backdrop, we have over the last week been part of the Singapore FinTech Festival, together with thought leaders, experts, practitioners, and the FinTech community from across the globe. We have deliberated on how innovation and technological advances will power the future of financial services across the globe. The theme of the Singapore FinTech Festival 2021, Web 3.0, has presented an exclusive platform to reflect on three broad themes. First, how we can reconfigure financial products and services delivery through embedded finance, decentralized finance, and digital currencies. Second, how to integrate environmental, social, and governance considerations into the core design of financial services. Third, how countries can accelerate the building of foundational digital infrastructure that includes digital identity, trusted data exchange, interoperable payment systems, and consent schemes. The Afro-Asian FinTech Festival 2021, held today, has further accentuated the deliberations on Web 3.0 at the Singapore FinTech Festival. With the theme Sustainable Innovation for an Inclusive Digital Economy, we have reflected on digital innovations and their impact, while placing emphasis on people-centered technology and innovation for an exclusive digital economy. I cannot agree more with our distinguished speakers and panelists who affirmed that while innovative technology and digitalization continues to play a critical role in the delivery of financial services, collaboration between players in the fintech ecosystem is key in building people-centric solutions. As we build back from the pandemic and circle back to the theme of the Afro-Asian FinTech Festival 2021, how do we foster sustainable innovation for an inclusive digital economy? The simple answer in my mind is that it has to be about the people. People have to remain at the center and heart of it. Let me elaborate my answer with three pillars. The first pillar is people centricity. Innovation must address people's needs. We must recognize that innovation is a handmaid and not the master, and focus on the problem or need it seeks to solve, rather than the allure of the technology. And the problem's needs are numerous, especially given the setbacks occasioned by the pandemic, which have affected a large intersection of our populations, particularly the micro, small, and medium-sized enterprises, women, and youth. These segments of our population have been constrained from accessing financing due to limited access, including physical access, to financial services and lack of collateral. Digital financial services, including mobile phone technology in many African countries with high mobile phone penetration rates, present a platform for anytime, anywhere financial services. Furthermore, data collected on these technological platforms provides an opportunity for financial institutions to use artificial intelligence. Accordingly, credit profiles can be created and used as alternative collateral substitutes for credit risk appraisal and pricing. The second pillar is protection. While digitalization presents immense opportunities to transform lives, it also presents risks. Many of our citizens are entering the digital realm for the first time and are not savvy enough to counter the cybersecurity and data protection risks. Cybersecurity, being transnational in nature, requires that we build national, regional, and global circles of trust to coordinate and share information. We must also empower our citizens to safeguard their data, particularly with the growing influence of global big tech firms that are more technology-centric as opposed to being people-centric. The third pillar is collaboration. As we move towards a global digital economy, we should aspire to leave no one behind. Our evolving global digital economy has inspired new discussions on such topics as the central bank digital currencies, CBDCs, as an avenue to reduce costs and enhance financial inclusion and the efficiency and safety of payment systems, particularly cross-border payments. As new technologies and innovations such as this emerge, collaboration is in a safe environment is important in determining the use cases, merits, and demerits of such innovations while keeping people at the center. As I conclude, I'll be remiss if I did not touch on climate change. That is no longer a tragedy on the horizon, but a clear and present danger. As part of our contribution to scaling up Kenya's climate ambitions, CBK last month issued guidance on climate-related risk management to banks. The guidance is intended to enable banks to take climate-related risks into consideration while leveraging on financing of opportunities in the pathway to a low-carbon economy. This will support our broader vision of greening the banking sector and positioning Kenya as a premier green finance hub. As you'll appreciate, climate change cannot be tackled by a single country on its own. It is a global war. We will therefore work with other central banks across the continent and beyond to ensure that climate-related risk management is a key consideration as we execute our mandates. Ladies and gentlemen, Web 3.0 is here with us. Innovations and technology are evolving as fast as humanity is. As we seek to harness the next phase of technology to serve people better, let us seize the opportunities today and work towards shared prosperity for our citizens while safeguarding our planet. I hope the ideas you have picked during this festival will come to fruition in the period ahead. And I look forward to seeing you next year. Thank you very much.